Hello again, and welcome to the WSBI ESBG Exchange podcast for the week of 18 November 2019. I'm James Piper, Senior Advisor for Communications at the two associations with a mission to help savings and retail banks thrive. This is episode 9, the first in a series of podcasts on the ESBG handbook released earlier this month. We'll also talk about the Retail Banking Conference taking place this week and look back at World Savings Day 2019, which took place on 31st October. Like every podcast, we highlight news from the world of savings and retail banks in some 80 countries around the globe, including 26 members in 21 European countries. As I just noted, this week we focus on Europe. The European elections have been completed. We have a new parliament and a commission that is about to seat itself soon. So as the new European Commission gets put in place, ESBG, the European Savings and Retail Banking Group, has published its handbook that outlines the savings and retail bank story and how to help Europeans prosper in the coming years. Joining us again in Studio 4A is Sebastian Staduca, who heads up our Regulatory Affairs Department here at ESBG. Sebastian joins us for part 1 of our discussion on the new ESBG handbook. Sebastian, thanks for joining us.
Thanks for having me, James.
Wanted to talk to you a little bit about the new ESBG publication, the new handbook as we call it, called Serving All European Citizens. And this new memorandum released this month has 7 sections that spell out the Savings and Retail Banking Association's position on a host of issues. So wanted to start things off with, the opening of the handbook, which is, the Serving Citizens First section. So it has a very citizen-focused, people-focused bent. So what are the top-line issues that people need to hear from us?
Well, I believe when they read through these sections, they get to know us better. We explain who we are, what the business model is, the business model of savings and retail banks. And traditionally, it has been about serving citizens first, serving Europeans. When we explain our business model to the outside world, we often refer to the 3 R's. Let me maybe briefly explain that. You know it, James, but maybe our listeners don't. So the 3 R's is a set of common values and approaches that all of our members share. I would say the first R with which we can start now is retail. So we are an association of savings and retail banks. Our members serve households, they serve enterprises, mostly small and medium-sized enterprises. They serve local authorities, so it's a very retail-focused business model. The second R is regional. So our members have still now in the digital era a very regionally focused business models. Of course, they are present in digital channels and offer great apps, so digital banking is not an issue, of course. But we believe, and our members believe, that it's still very, very important to be in the region, to be in remote areas, to know the customer and to serve the people where they are. So this regional focus has not been given up in modern times. Mm-hmm. And the third R I wanted to mention is the responsible approach to banking. Our members are not purely profit-driven banks and banking institutions. They're not aiming at profit maximization. They have the objective to give a return to society. This is what we call the double bottom line approach. What it means is that they balance financial stability with the return to society. So parts of the profits are reinvested in the local communities in which they operate. And on top of that, there are lots of philanthropic activities that our members are carrying out. So there is this responsible and social component in the business model.
Yeah, I'll interject there. In the new handbook, you'll see some facts and figures that demonstrate the amount of commitment we have to philanthropy, foundation work. So 1.3 billion it says in the book. And in terms of how they serve, it's something like 150 million Europeans use banking services from ESBG members in more than 20 countries. So it's really helpful to see some of the statistics and you telling us how they come to life a little bit.
Right, and you can also put a number on the regional aspects. I think, if I remember the figures correctly, our members operate through roughly 50,000 bank branches throughout Europe.
Indeed. And 885 savings and retail banks. So you can read all about it in our new handbook. You talked about retail, you talked about regional, you talked about responsible. Is there any other aspects to what ESBG thinks are necessary for our banking model to thrive and serve, what did I say, 150 million Europeans every day?
Yes, James, let me maybe just briefly mention two concepts before we get into the detail of our new publication. The first one is proportionality. We think a proportionate approach to banking regulation is absolutely necessary for small and non-complex banks, for locally focused banks. And you will hear about that probably in many sections if you read through the publication, or I'm sure I will mention it later on in this podcast too.
Or you can Google it. Just type in proportionality in ESBG and you'll get right to our position. So
that's also a good hint.
Yep.
And the second thought I wanted to mention is diversity. We very much believe in a biodiversity in the European banking sector.
I think diversity, I just saw a research paper that my colleagues here in the office shared with me, and it's really a strong argument. And you see research being done on it. You know, the need for a diverse banking system where savings and retail banks are part of the overall banking equation, an important part.
Yes, and we also think that diversity is very important for financial stability. Imagine a crisis hits Europe again. We think it would be very important in this case that Europe has a diversified banking sector, and if the crisis hits from a certain angle, that not all banks pursue the same business models, but that the effects of the crisis can be mitigated in some parts of the European banking sector.
And there is a lot of academic research on this whole aspect of diversity. I just read a paper this week that talks about that. So that's something that's really important for researchers, policymakers, and of course, banks and the customers they serve. Right, so for this podcast, let's dig deeper into the first couple policy sections of the new handbook. So the first part in the policy section is called Prudent Banking Specific Rules. And this has a lot to do with Basel, from what I remember. And it touches on non-performing loans, or NPLs, and banking revolution. So maybe just shed some light on that whole chapter.
Yes, with pleasure, James. Thank you. Maybe I will spend most of the time on Basel, since it may be the single most prominent file that we have on our plates right now. For those of you who are not familiar with the idea of the Basel reforms, there was a lot happening after the financial crisis, and we very much agree that rules needed to be reshaped, and maybe the sector was not resilient enough. And this is when Basel III came into play, which is a after-crisis legislation. We are just about to finalize that. And it does not matter whether you read the finalization of Basel III, or some call it Basel IV. We're always talking about the same thing here. Europe took a particular approach in implementing all these reforms. In comparison, for instance, in the US, they said, well, these Basel III rules have been designed for internationally active banks. So we applied to the internationally active banks that are with us here in the United States. In Europe, in contrast, the idea was to apply the full set of Basel rules to all European banks, and not just to the internationally active ones. And this is, to a certain extent, quite of a concern to us, because it comes with a lot of administrative efforts, with a lot of compliance requests that banks need to fulfill. And sometimes we have had the feeling that applying the rules to the entire sector was a bit of an overshooting. And I promised you before that I come back to proportionality. So also in the finalization of Basel III, the implementation that we're looking at now, we think proportionality needs to be considered. We would like to see that the rules differentiate to a certain extent between the big internationally active banks and the mostly smaller, less complex banks, with some rules that are a bit more tailor-made to them and their business model and their riskiness. And if I extend a little bit on proportionality, we think it's not just the size of banks that matters. Of course, that is an important element, an important criterion. But you can also be a bigger bank and have a very simple business model. So the risk profile, the interconnectedness, the nature of your activities should matter as well. And in this Basel dossier, yes, proportionality is key, and this is what we're currently arguing towards the European decision makers. And in addition to that, let me point out that there is also an international dimension of this Basel IV dossier. We recently heard about the EBA figures the EBA analyzed what capital impact this latest set of reforms would have on the European banking market. And they come up with a figure of roughly 130 billion euros that banks would need to find somewhere to be compliant with Basel IV. And given the different approach in Europe, where it should apply to all banks, whereas this is not the case in other parts of the world, we see a certain distortion of the international level playing field.
So why should EU policymakers act?
Well, we think it's obvious to keep the level playing field at international level so that they implement Basel in a way that European banks are not, in comparison, so much more hit through the reforms than banks in other jurisdictions. That's one very important point that we are currently making and encouraging them to act in a certain way. And secondly, of course, to keep also the level playing field within Europe, that bigger banks, smaller banks, less risky banks can still compete on an equal footing.
Wanted to talk with you now about another chapter, clear information with less hassle. That's the second policy theme in the handbook. And just share with us a little bit on what's inside that chapter.
Yes, with pleasure. So what we are talking about here is firstly, of course, generally about reporting. The post-crisis reforms have increased the reporting requirements in a dramatic way for banks, and we see many new authorities out there. We now have not just a single supervisor in Europe who demands a lot of data from banks. We have resolution authorities that have not existed before, and so on and so forth. And what we have been observing sometimes, unfortunately, is that the authorities don't always communicate all the data to each other in the way we would hope that they could do it. So that means that banks get from different authorities requests for the very same data on several occasions throughout the business year. Sometimes it has even happened that the same authority, different departments in the same authority ask for the same data or very similar data. So I would say our overarching idea, if we talk about information that comes from banks to the authorities, is please streamline them wherever possible. We support you in any initiative. And luckily there are already some initiatives out there that are being built up. The ECB works on projects called BIRD, or an integrated reporting framework. The EBA is also working on a project called Euclid. So we're very much supportive of the authorities' work there. So if you want to know more about that, that is certainly in this second chapter of the memorandum. And in addition to that, in this chapter of our handbook, we talk about the reporting standards. So it's a lot about IFRS 9, but also about IFRS 17 and other reporting standards. Non-financial reporting is popular in there. And last but not least, we also talk about information between banks and clients and customers. In this respect, I could mention MiFID and PRIPS, which define what information a bank needs to give the customer before they, for instance, buy an investment product. And this flow of information, as important as it is maybe too rich so that customer can hardly digest it. So we make some proposals in this chapter also on how we could rearrange the flow of information between banks and customers so that it is better manageable and handleable for both sides.
You know, when you look at the chapters and you go into individual policy areas in the book, we have a yellow box. And in there, you'll see the question, why policymakers should act. So, you know, if you want detail about a certain policy area, it's in there. But if you need the quick look as to how policymakers should act, inside the brochure, you'll see it highlighted quite prominently. I wanted to switch gears a little bit, stay on the handbook. We first talked about Basel and, of course, issues related to financial reporting. But now let's talk into really the meat and potatoes of our banking model, and that's providing financing to businesses like SMEs. Now, in our brochure, our handbook, you'll see that we provide about €1 trillion in corporate loans, including SMEs. So that subgroup, SMEs, you know, they're part of the real economy. And the real economy depends on savings and retail banks. And those are our ESBG members. So there are loans for companies for all shapes and sizes, including SMEs. So share with us the policy asks that we think would help further unleash SMEs and SME growth and help the overall economy.
Yes, of course, James. I think you just built a perfect bridge between the business model, the customers that our members have. It's a lot of SMEs and links to what we said at the beginning. And it's to a certain extent also linked to what we said before on Basel. So and in Basel it's a lot about risk management, credit risk. We see quite some changes for those banks who use the standardized approach for credit risk, and also for those banks who use internal models for their credit risk assessments. And if these changes lead to a more costly environment, to a certain extent they will. The question is always how the bank can balance those costs. Does a part or a large part even need to be transmitted to the client who asks for a loan? So if this is to be answered with yes, and we cannot exclude this possibility, the loans also for SMEs could get a little bit more expensive, and this is what we fear.
I see. So with our membership, some use the standardized approach and some use internal models.
Yes.
And out in the banking world, outside of our membership, again, some use standardized approach and some use internal models.
Yeah, exactly. So a lot of our SME messages are packaged in our Basel messages, Basel 3, Basel 4 messages. But also, in addition to that, we have some ideas, some requests that we are regularly communicating. Let me maybe mention two of them. I think we will later on delve also into sustainable finance, which is one of the most important and biggest policy areas, meanwhile, I would say. And it's also about SMEs in these debates. When an SME asks for a loan to make an investment, it will be the case that they need to report certain data. It could be that they need to prove how sustainable the investments will be. And the data availability among SMEs is maybe not always as promising as for bigger companies. So we also do not forget about SMEs in the sustainable finance debate. And lastly, we will certainly not forget about them in the debate about the Capital Markets Union, which we fully support. We think it's very important to restore investors' trust and raise confidence in capital markets. We do think that increasing financial education will help to get more people familiar with capital markets so that people make better choices and go for the products that perfectly serve their needs. So we really want to increase the participation of retail customers in capital markets, but we have a doubt that this can really become the source of financing for SMEs. It's not just our data who show that, it's also data from other stakeholders that say that the preferred means of financing for SMEs is still, and by large, is still bank financing. So we certainly see the Capital Markets Union as a welcoming project, but only as a complement to bank financing. And we would like to remind the Commission that while building the Capital Markets Union, please don't get the traditional bank financing out of your sight, out of your mind.
Thanks, Sebastian. And we do have examples of SMEs in Europe that benefit from financing from WSBI and ESBG members with a ESBG brochure called Banking, Serving, Thriving. It's another brochure separate from the handbook, but it gives rich detail as to how that process works and how it's helping small businesses in many countries in Europe. Well, Sebastian, this is just part one, but we'd like to invite you back for the next podcast to talk about part two, where we start delving into things like sustainable finance. So I hope you join us very soon.
It will be a pleasure. Thank you, James.
Thank you. So that was a great first talk with Sebastian about the new ESBG handbook, Serving All European Citizens. So look out for it on our website. It's on our homepage. And we have a great new microsite that really highlights all the best bits of the new brochure and links you back to the specific policy areas that he talked about on this podcast. And next time, we hope to talk about more subjects like sustainable finance, which should be really interesting. And that's coming up in our next edition. So let's switch gears and talk about what's happening this week. We have the Retail Banking Conference taking place this Thursday here in Brussels. The one-day conference brings together EU policymakers, regulators, and leaders from savings and retail banks to talk about the future of savings and retail banking and policies that are shaping the EU banking sector. It features European Central Bank policymakers who will provide insight into ideas shaping this EU banking system and also touching on sustainable finance. We'll have policy-driven panels that will focus on three themes. First, the future of the EU supervisory system. Second, sustainable finance. And at ESBG, we think it's important to look beyond environmental concerns, but also the social aspects of sustainability. And third, the European payment system, its future, and its sovereignty. More specifically, a future modern instant payment system. So who's going to be speaking? Well, scheduled to headline the event are Andrea Enria, who is the chair of the Single Supervisory Mechanism at the European Central Bank. He'll do the opening keynote, along with Luis de Guindos, who is vice president at the European Central Bank. And he'll address the audience before the Sustainable Finance panel. Our president here at ESBG, Helmut Schleweis, will speak as well. He'll give the opening address. And we have a host of other representatives from our membership and other experts that will be on hand to exchange. So don't miss out. It's Thursday. And finally, let's talk about what took place just 2 weeks ago. World Savings Day 2019. This year, the theme was Savings Give Life a Lift, and it was celebrated in countries around the globe. WSBI ESBG ambassadors were on hand for special ceremonies in many countries, including the Dominican Republic, El Salvador, Morocco, and in the Netherlands. And plenty of other ceremonies took place by WSBI and ESBG members during the week. So we were really pleased to be a part of that. And we had lots of activity on our World Savings Day dedicated website. So look out for that. Just type in World Savings Day on Google and you'll see WSBI ESBG's dedicated page on World Savings Day. And we'd like to thank all our members and all the people who celebrated World Savings Day on 31 October. That's it for this podcast for the week of 18 November 2019. Special thanks to our technical ace, Alexander Duchermont, and Sebastian Stodulka. To close, we welcome listeners to learn more about WSBI and ESBG on our website, especially the new ESBG handbook. And we also welcome listeners to learn more about the Retail Banking Conference on our website. It's on the homepage. I'm James Piper, signing off until next time. Thanks for listening. For more information about WSBI and ESBG, go to our website. Visit us on YouTube, Twitter, and LinkedIn. The podcasts are available on both SoundCloud and YouTube.